then our non-labor expenses pulled in from another tab, our equipment expenses. And then now's a chance of, do we have any subsidy that we're going to put directly on a service line? And if you do, great. If you don't, you can just leave it as 0. Based on the tab previously, and this is the most important piece of the tab from the previous tab, is if you had a surplus or deficit, where do you want to charge that surplus or deficit? So it'll pull in from over there. So now our total cost for service line 1 is $110,000. 2, $142,000. Service line 3 is $163,000. Now you can list on all of your users if you have your current utilization. So for OSU users, this is why. It is an old, because this still says NU and it should say OSU. So if you have, let's say we have 100 users who use this, 250 users who use this, and 350 to use this. So, or this is how many units you're actually going to do. So we'll increase this. And if you have academic users or external users, you can add in what is their usage going to be for these services. We'll leave it blank just to try to save a little bit of time. And then what is your projected, so this would be our usage from this last year. What is our current usage? And what do we predict our usage to be for the next year? And we'll increase a little bit just so, because our business is booming. So then then you can also here build in, so sorry, I skipped this line. So these would be, you can put hours, these are samples, and these are lanes. So whatever unit you want to put them in. And then projected usage, it would be the same for our units. So now it's taken all of the information from all of the other tabs and broken it down and given us a per unit cost. And now this is where you get to decide, are these costs reasonable based on market? Are these costs reasonable based on what other cores at the university will pay? Say that this is too high and you want to actually only charge $150 for it, but this one we could also charge $150 for. So it evens itself out, and then we'll just go ahead and charge the $50 and $50 for here. You want to then just put what your external rates will be if you have external users. It'll then go ahead, take what you said your rates are going to be, and multiply it by, I just don't want to run out of time, so I won't walk through the calculation, but what down here will do is take what your fee is going to be, what your usage is going to be, and break it down into how much revenue you're going to bring in, and based on the data from the other tabs, tell you if you're going to break even or not, based on those services and those fees. Those will work itself out when I give you this spreadsheet. But that's what that bottom section does. Yeah. Mm-hmm. I'll send you this one that we did, and I'll send you an unlocked, clean one that has all the formulas working, so you have both of them. But I don't want to cut Krista short. I know we still have an hour, but we do have to go through the budget stuff. So any questions? This was a very detailed, in-depth example of fee costs, and we kind of got sidetracked because of all of the, I'm covering the microphone, because of the formulas, and I apologize for that. So before we move on to budgets and the business plan, any questions about this? I don't want to cut you guys short from asking questions.
Can I just make a comment?
Sure. Mm-hmm.
So, in addition to, and you are kind of following.
Yeah. So we don't have a set formula in the CCC. We don't say you have to use this. We give them, it's all based on tool based. This is a tool we let people have access to. Like I said, only one of our core directors actually uses it, which is fine. All of our others, we just take a different approach. We've used now the same approach with the same core, has used the same fee tool, her same setup that they've used for the last 3 years now. We've tried to, instead of recreating the wheel, we say, well, here's how we did it last year. What do we need to change? We need to change salaries in it. We need to change anticipated usage, service contracts. So we can just kind of plug those numbers in, and we have a kind of a grid and says, here are those people. In Krista's case, they kind of did a time study, and this is another example of how you can do fees. Her staff figured out how long it actually takes them to do certain tasks and do certain things. So one tech, it takes them 25 minutes, and another takes this. So I actually, in her fee calculation, have it broken down to what are their hourly rates broken down by minutes, and I just multiply those in. So that's kind of what we've done with Krista's core, and we've broken down the service contract by minute unit. So then those get added in as well. So you can break it down to the most detailed level, or the most broadest level is taking what are all of your costs divided by your anticipated usage. And in the CCC, out of all 20 cores, there's a wide range of what people are doing. There's some people who do simple math and simple calculations, and we have Chris is one of the most detailed. It's very minute, and it breaks down to the minute how much we're charging for things. But that minute rate, when we built the minute rate in, it's based on an hourly rate, which is then based on what that tech's time is. So if her tech cost $80,000 with Fringe, divided by that 1,600 hours, because we don't expect him to bill for every hour he's at work, because he has meetings, he has other things he's doing. So the way we got that hourly rate was using that 1,600 hour model. So then we're still recovering all of his salary. We're just only charging for it by 1,600 hours. Does that make sense? Okay. So a couple quick slides before we're going to go through this budget template. So now that the internal rate is done, what do you do for the external rate? You just want to make sure you want to charge higher than your internal rate. You can't charge external people lower. Wouldn't be allowable to OSU, and it would then be making NIH mad, because you're then giving someone who possibly is not paying with federal funds a lower rate. You want to make sure it's reasonable and be market competitive. Acceptable, we talked about this before, for external people, if your institution or university allows you to charge that 54% F&A rate. You want to make sure that you're not collecting too much external revenue, because it might fall under the unrelated business tax income. And if you have questions about that, you'll want to contact, his name's Scott Gill, and he'll be able to tell you if you're making too much income, and you'll have to be required to collect service tax or sales tax.